Hello and welcome to 5th of August 2024 update, where we saw a very big correction happening in the market. In this video, we'll discuss the possible reasons and the reasons that had led to the falls. So, starting with some of the points that I culled from the internet, that in the last 52 months, Nifty 50 has gone without a decline of 5% or more. So, any decline where in the last 52 months we haven't seen a big decline coming in Nifty. This is actually a record uh, uptick in the Nifty, where for 52 months we haven't seen any fall happening of or any correction happening of 5%. So any correction that's happening right now is definitely a welcome move, because the valuation on the valuation front, when we're seeing on the all the indexes, the Nifty was very high on that front. The other point that I called out was that there's a talk about yen carry trades, which is another point to note, that US, so the yen carry trade. The point to note is that is the US Fed had cut the rates to zero, and the Bank of Japan FOMC rate differential, the rate differential between the US Fed rate and the Bank of Japan was at a 40 years low about 3 years back. But even then, the markets rally. So this applies in the context of today also. So let's see how the things are different. Uh, so let's move to the why did the markets crash? So the first reason is the fear of US recession, which has triggered the sell-off globally. So this can be seen in this slide, where all the indexes in the world are in last 1 week has seen going down. If you look at the US market, Dow Jones is negative by 4%, Nasdaq was that negative by 3.35%, S&P was down by 2%. Even the European markets were down by 6 to 7%. In the Asian market, sorry, when we look into the Asian markets, we see that there was a big fall that the Asian markets witnessed, where the Japan's Nikkei was down by 16%. Yes, we are talking about a 16% downfall in Japan. This is again the impact of the carry trade that we have talked about. The Taiwanese market was down by 14%. Other markets were down by 5 to 6%, and that's one of the biggest reasons that the Indian markets, the Gift Nifty, was also down by 4%. So this is the first impact is of the global uh, trigger sell-off that has been done because of the US recession, and secondly is the yen carry trade. So there's a yen carry trade as impact has been because of the Bank of Japan, which has raised the key interest rate by 0.25%. So the point that I've mentioned, the yen carry trades, the rate differential between the US Fed rates and the Bank of Japan, uh, even though 3 years back it was the differential rate was not much, even then the markets rallied, but this time it is being taken as a negative impact. So I don't think this would last. Even the recession impacts is something that's a building on story. I don't think the recession would come in as the US the rate cuts that we've been looking forward to for such a long time in last one and a half year, where the markets were looking forward to it. The data which have been presented right now in the front of the Fed will cause them to reduce the rates. So the recession fears are definitely not is not something which should be on the card. The third and the most important reason could be the Middle East crisis, which after the killing of Hamas leader Ismail Haniyeh, their military leader Mohammed Daif, and the Hezbollah commander Fouad Shukr. So this is another brewing story which we definitely need to look into, because this might again impact the trading relationship in the world over, and again impact the sentimentally it might give an impact to the markets. But we have seen that there have been a lot of wars that have happened in last few years. So I think even this could pass on. So let's see how much has the market corrected from their recent highs. So Sensex made a high on in the month of August. That is starting on the 1st of August. Even Nifty made a high on 1st of August. From that point, they have corrected by 3.8% only as of today. Bank Nifty also corrected by 5.6%. Mid cap was has corrected by 5.3% as of today, and Nifty small cap has corrected by 6.6%. So, if we should definitely look at the valuation, how the valuations had panned out right now. After this crash, Nifty 50 trailing PE now has reached 22.4, which is again a very good level, just above 2 years average and well below the 5 years average. Nifty mid cap 150 trailing PE is at 44.1 at 2 years and 5 years high. Nifty small cap 100 trailing PE is at 28.3, which is above 2 years high and just on the 5 years average. So, if you look at the valuation front, then definitely the Sensex and the larger index is well placed right now. The mid cap and the small cap are correcting heavily again, and definitely this was something that we've been looking forward to again. So what should what now? What should all we do? As always recommended by me, you should always keep your asset allocation in check. Stay away from mid and small cap if you're not investing for more than 10 years. So the valuation of the mid and small are still stretched, and this sell-off could lead to much higher pain in this segment. Definitely continue with your SIPs and do consult your advisor and look into how your portfolio can be managed, or the investments can be done. That was all from my side. Hope you enjoyed the video. Do like, share, and subscribe to our channel for more such